Lots of different types of loans out there, obviously. Again, this may seem rudimentary and a bit basic, but again, during my tours and talks with these practitioners, they always tell me, keep it basic, keep it simple, and what we know, great, we already know it, and what we don't, we take away. Collateralized conventional loans. What you're looking at there is the bank or the lender is saying, I need some collateral with this. I like you, I think you're a great practitioner, but I need peace of mind to know that if you default on this, I've got an asset that I can secure. Uncollateralized, just the opposite. We're not looking for that hard asset. We're going to trust you based on your credit and lend you this money, in most cases at a premium, because if there is no asset for them to collect. Line of credit, many of you as practitioners may have a line of credit. It's a simple flow of money that they put in your account that you can utilize when you need to, and you pay interest on that, typically adjusting as a rate, and you pay on what you've borrowed or pulled out of that line of credit. Credit cards, many of us have those. At the end of the day, that's an easy way to access credit. And be mindful of the terms and the conditions within a credit card. It's usually a little more expensive, but again, it's easy cash to access, but there are fees and things like that that you want to be aware of. A lease. A lease is not as popular as it used to be. It's a form of financing that's not as prevalent these days, but again, it is there for mostly equipment purchases and things like that. I would advise you talk to your CPA when you're looking at different options and leases, because there are a variation of leases out there. You have equipment leases, true operating leases, things like that. They each have their tax benefits, and some don't have as good a benefit as perhaps they used to. Merchant cash advance. This has become a pretty popular way to obtain some cash if you're looking for some quick capital. It basically says if you doctor have a good stream of income that you generate from people paying with credit cards, we'll basically lend you money on that. That's what they call an advance. So per se, let's say you generate about $2,000 to $4,000 a month in credit card sales, meaning people come to you and pay their bill with you with a credit card. That company will come in and say, great, we're going to give you this advance, and we're going to swipe a little bit of that income you have coming in right off the top so you don't even see it. So you got a $100 charge coming in, their rate is 20%, and they take that 20% and the 80 bucks goes to you. That's how that works. Again, becoming pretty popular just because it's very quick, short terms, and so on and so forth. So be aware of the different types of loans. Again, be in the driver's seat. When you're going to look for that money, have a plan in place and know what you're going to be going for when you're looking for that. It's always best to be in that position. Educate yourself.